Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, very good morning. Watching Trading Hour on CNBC TV18. I'm Ekta Patran. With me is Surbhi Upadhyay, and it's turning out to be not a bad session for us. So we have the Nifty, which is about 10,750 as we speak. So it's hovering around that level. We have the Bank Nifty, which is up around 0.4%. Lot of stocks in focus, and it seems as though consumption is the real theme that we're tracking today. Just see what's happening with the likes of Asian Paints, which is the top gainer on the Nifty. It should come up for you reacting to its numbers. Besides that, we also have Titan, which is in focus post numbers. Separately, we do have a lot of pressure coming in on all of the telecom counters. So you can see Bharti Airtel is the top loser on the Nifty. Idea is at a new low as well. So a lot to talk about, including the likes of PCJ and Fortis. Hi, Surbhi.
Hi, good morning, Ekta. Yes, absolutely. As of now, it's so far so good because the market has been building on gains. If we're talking about the major constituents, then obviously some of the consumption result reactions, as Ekta also mentioned, they have had a phenomenal start to the morning session. So Asian Paints right on top with about a 5.5% sort of an up move. The interesting case of oil marketing companies, and they continue to build on gains from yesterday. In fact, most of them, all three of them, IOC, BPCL and HPCL, all three of those counters are up and about. And then you have the likes of some of the financial names that are really surging higher. So Indiabulls Housing Finance, Bajaj Finance, these are the sort of stocks that we can look at where the gains are looking more and more impressive. But let's talk about some of the other earnings that came out after market hours. Now, Mphasis reported a strong set of numbers for its fourth quarter with the FY18 constant currency growth being about 11.1%. CNBC TV18's Rukmini Rao caught up with the management. Here's what they had to say on the growth trajectory going ahead.
FY18 has been a good breakout year in terms of growth. I'm very glad that we grew 11+% for the full company. In an environment that wasn't, so tailwinded, at least for the better part of the year. Of course, the last quarter has, seen a little bit more uptake. So I think we're very pleased with the fact that we were able to bring growth back into most of our business segments, and especially pleased that bulk of our new wins came in the right areas of new gen services, and as such, we seem to be, making good progress towards turning the corner from a digital perspective as well.
Sure. 30% of the deals in the new, the deals that you've won has come from Blackstone clients. So in terms of mining, Blackstone, you seem to be doing pretty well. Is there more, space for you to kind of get more business from Blackstone?
Again, this time last year when we talked about opportunity, obviously, we had to still go out and win some business. So I'm glad with the progress we made so early in our tenure with Blackstone. It's a strategic, owner. There is almost 100 companies in their portfolio. Right? We started with a handful in FY18. We'll mine these. We'll mine more. That pool is not a static pool. It actually changes pretty dynamically. And I think we have the visibility, the track record, and the support from Blackstone top management to continue to win more business. Collectively, I think there's a very large opportunity because they spend between $1 billion to $1.5 billion a year. How much of that we can tap into? How much of that comes up for renewal? How much of that is new investment? So that's kind of the dynamic. But I think there's a very long-term opportunity
$1
there.
billion from the entire portfolio.
Yes.
Okay. So we've seen quite a bit of margin expansion this quarter as well, and you've guided pretty robustly for the coming year. What have you factored in for this? Increased guidance for the next year, and also in terms of headwinds, what has been accounted for?
Sure. So I think if you really look at FY18, we have quarter on quarter progressively increased the margins. We have taken a lot of steps in not only in optimizing, including the change in business model, and with that background, we are quite confident of the the revised band of EBIT, which we announced for FY19. We have in terms of the headwinds, we have factored in lower hedge gains, which will happen because of the way dollar rupee is moving, and also the probable wage hike further down the fiscal year.
Sure. In terms of, since you've spoken about rupee volatility, I know it is not predictable, but some kind of short-term vision or visibility that you have in terms of how this could be panning out?
It's, I think, very difficult, and I'll be the last person to hedge on or bet on the dollar rupee movement. But we follow a very consistent and stable hedging policy, and we'll continue to do that.
Sure. Nitin, in terms of digital risk business, do you think that it is stabilizing for now?
I think basically when we started the year, we had a lot of work to do to bring back the margin to at least in the vicinity of our company margin. And from that perspective, we said FY18 was all about stabilizing the top line but expanding the bottom line. We are very, very happy that we actually brought our EBIT from that business to low teens, from mid-single digits at the beginning of the year. We also said we'll stabilize the top line, and I think we ended past the top end of the band that we had guided. So we saw some growth coming in digital risk in Q4. And I think as we enter FY19, we talked about a renewed focus on an integrated go-to-market approach across all of our clients, across all of our segments. And we do believe that as that plays out over the next 2 or 3 quarters, we should actually, at least in our minds, we made the shift that every client is a growth opportunity, and that includes DR customers. So I think we should start to see, hopefully, results, coming out of that integrated one Mphasis approach.
Also thoughts around the insurance business. Is that kind of the dip that we've seen, a short-term drip?
I think there was a one-time issue that led to an exceptional gain in the revenue. So we clearly think that stability is already there in that business as we speak. Our pipeline in insurance is actually pretty good because given the interest rate environment, we are starting to see insurers spend money, especially life and retirements or consumer-facing PNC. Even insurance brokers, actually, we announced a deal with the large insurance brokerage business in the UK recently. So I think that the pipeline is very, very good, and I'm pretty confident that we should be able to get growth back in insurance as well.
Sure. I know for a fact that you don't guide for FY19, but if we are to talk about Mphasis versus peers, how would you place Mphasis, taking on FY19?
I think the way we think of our business is if there is a guidance out there for the industry, which for this year happens to be the 7 to 9% range, can we actually continue to beat that market guidance? And while we do that, can we also continue to expand our operating margin profile? So that's kind of our 2 goalposts, your North Star that we follow, and I think that's what we've guided for the year.
Okay, so that's the management of Mphasis, but we need to get back to the markets. 10,756 is where we're at. Mitesh Thakkar joins in to discuss the technicals. Mitesh, hi, over to you then. 1.3% gain for the mid-caps on a week-to-date basis at current reckoning, but we have for the Nifty, but the mid-caps have underperformed. What's your sense for key levels from here on?
Yeah, good afternoon. I think we are standing at a key level. I think last 4 or 5 sessions, what we have seen is that on an intraday basis, hourly chart basis, I think we've seen multiple tops in this range of 10,760 to about 10,780. So unless until that is being crossed, you might see some kind of subdued sideways activity continue, which is what we have seen for the last few sessions. So that's the level to watch out on the upside, 10,780. And for the timing, I think in case we fail to do that, then I think you might see some consolidation broadly of 100 points between 10,760 to about 10,650. So it remains more of a buying side market, buy on dips kind of market, but a breakout will happen if we start getting past 10,780.
Okay, let's see if we can actually climb and take out that level today. We've been trying it for several days now. Mitesh, stocks then, trades for the hour?
Yeah, I have one sell and one buy. Nestle, I think with good numbers, has broken out and made a fresh swing high. It was a buy a couple of days back as well. I think now can be bought afresh with a stop at 93.80. Look for targets of 9900. While Godrej Industries has given a sell signal on the intraday chart, so keep a tight stop at 582. Look for declines to about 555.
Okay, all right. Well, Mitesh, we have a couple of Twitter queries. First up, we have Sunil, who has 100 shares of Cient at 540, wants to know whether to hold or sell that stock.
The stock has done extremely well. In fact, last few months we have seen the stock gain by about 60 to about 65%. But I believe that the long-term chart still suggests that levels of 1,000 can be crossed over the next few months. So keep a stop at 750. Revise your stop loss over there. Chances are that it will not get hit, and we'll see possibly levels of 1,000 to about 1,050, possibly by August end or maybe somewhere around those time levels.
Okay, all right. Thanks, Mitesh, very much for taking the question and also getting us those trading calls. Let's now move to some F&O strategies. We have Krish Subramaniam, Co-Head Equity Advisory at Altamount Capital, joining in. Krish, good to have you on the show. So what strategies are you going with? Are you looking at stocks, or do you have a call on the index as well?
Well, should be morning. I think the last few sessions that we have seen, I think the Nifty has been maintaining, but I think the advanced decline ratio has been not been very supportive. So a bit of a tentative, and we are also going into a big event. So I'm giving resorting to a strangle strategy wherein one could sell 11,000 strike call and 10,400 strike put on the Nifty. So the premiums are still rich. I think it's almost giving 80 bips. Keeping a target of 20. Once the volatility subsides, I think the premiums should crash. And one could keep a stop loss of 100. And stock specific, again, couple of strangle strategies. Tata Motor. Now here this also got stuck in some sort of a range. So one could resort to selling of a 350 strike call and a 320 strike put. The premium inflow is almost 14 bips, and we're keeping a target of 6, and maybe one could keep a stop loss of 19. And the last one is metal counter Hindalco. Hindalco has also shown some pretty high volatility. A strangle strategy which will involve selling off a 260 strike call and a 220 strike put. So the inflow is about 7 bips, and keeping a target of 2, and maybe one could keep a stop loss of 9.
Okay, all right, Krish.
Still holding on to a gain of about 37 points on the Nifty. You do have a couple of names like ICICI Bank that continue to contribute on the upside as well. Then you have a biggie like an L&T as well. So these are obviously the gainers. Reliance, L&T, ICICI Bank, some of the major heavyweights which are holding things up in favor of the bulls. Keep an eye out on Bharti Airtel, however. There is some adverse news flow, and obviously this new aggression from Jio with respect to postpaid subscribers, that's really weighing on the stock for this time being. We'll talk more about that in a moment, but right now let's focus on another set of earnings that came after market hours. The Indian Bank stock has taken a knock after earnings. Divergence of nearly 600 crores as well as the impact of the Reserve Bank's Feb 12th circular led to a steep rise in credit cost as well as deterioration in asset quality. Kishore Kharath, MD and CEO of Indian Bank, now joins in to take us through the fine print. Good morning, Mr. Kharath. Thank you so much for joining us. Now, I want to start first with the asset quality issues. Your gross NPAs went up by about 25% on an absolute basis. Can you break this down for us and tell us more about the internals, the slippages, etc.?
It is 2,988 crores to be precise, and this actually came majority out of that RBI new resolution guidelines, wherein most of the accounts which were under resolution we were required to downgrade. That itself is close to 1,700 crores.
Okay, so then what is the residual restructured book, the restructured standard assets? Because maybe, we might see slippages from there going forward?
Yes, correct. See, last year we had actually brought it down restructured standard. It was slightly above 4,000 crores. But now 50% of it is slashed already, which we have considered. Now whatever remaining is there, 2,079 or odd crores, that is all performing well. So as of now, we don't foresee any downgradation from that particular portfolio.
Okay. Can you give us some guidance for slippages in Q1 and for FY19 as a whole?
So quarter on quarter basis, if we see our slippages were well within control. It was rather with migration also, and with this also it was coming hardly 600 to 700 crore it used to be. And we foresee there will not be any lumpy accounts are not remain now. So therefore, the similar trend will continue. So 2,000 odd crores, which is it normal circumstances, downgradations which are coming from various sectors. That only we are expecting. It will not escalate now, because whatever was to be escalated is already accounted for.
Okay, fair enough. But your gross NPA is at 7.37%. Is this the peak gross NPA, you think?
No, it had peaked last year itself at 7.47. Thereafter, if you see quarter on quarter basis, actually our GNPA were coming down, and it had come down. The best performance we show was in Q3 was 6.27. Thereafter again it escalated in Q4 because of that one revised guidelines. But otherwise this 7.37 will be the highest now for the next quarter. Again all will start coming down. Our plan is to bring it down to less than 6% and less than 3% is net NPA. Today also our net NPA, it would have been actually come down to less than 3% this year itself. But now it has remained at 3.81%, but I'm quite sure it will come down to less than 3 in the current year.
Wow, okay, that would be a significant improvement if that were to happen. Let's talk about margins also, sir. Where do NIMs stand at the end of this quarter?
Yeah, it has improved to actually 2.9. We were expecting we will be achieving 3%, but because there were certain interest reversal also because of these new guidelines. So therefore, but still it has improved by almost 31% in a financial year. So it has now reached to 2.9%. Our endeavor will be to push it beyond 3% in the first 2 quarters itself.
Mr. Kharat, the loan growth, despite all the asset quality issues, the loan growth remained quite robust in the 4th quarter at over 20%. For the year as a whole, FY19, what are you expecting?
See, last year run growth, we have actually focused more on the RAM sector, retail, agriculture and MSME. My RAM sector all put together has grown by 26%, more than 26%. And within which, if you see, my agriculture is grown by 20%, retail is grown by 32%, MSME by 21%. This focus will continue. The overall composition of the business also, if you see, last year we were having 51% as a non-corporate and 49% corporate. This year we have actually improved that to great extent. Now 58%, from 51 it is gone to 58%, and corporate has come down from 49 to 42%. The focus will continue as it is, and we would like to actually reach the composition of 60-40 in the current financial year.
Okay. Just one quick detail before we let you go. What were your upgrades and write-offs this quarter?
Q4, our upgradations are, one second, I will give Q4 figure. Upgradations are 108 crores. Technical write-offs are 462 crores.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and talking to us. So that's Indian Bank. It's down 0.5% today. But remember, it's reacted very sharply to what was the slippage number, especially for the quarter gone by yesterday. That stock was down almost in double digits. 3,000 odd crores in terms of slippages almost, which compares to around 1,000 crores in the previous quarter.